Hey everyone, and welcome back to Today Assets Report, your go-to source for the latest breaking news and in-depth analysis on everything happening in the world of cryptocurrency and digital assets. I'm your host, and today we've got an absolutely crucial update that every single XRP holder needs to hear right now, because what we're about to discuss could have major implications for your portfolio and your trading strategy moving forward. We're diving deep into the Ripple XRP news that has the entire crypto community buzzing, and trust me when I say this, you're going to want to stick around until the very end of this video, because what happened in the last 24 hours was nothing short of dramatic. XRP was literally on the verge of a massive breakout, the kind of price action that traders dream about, the kind that could have sent this digital asset soaring to new heights and potentially changed the entire market sentiment around Ripple's native token. But then something completely unexpected happened, something that caught even the most seasoned analysts off guard, and it completely shifted the trajectory that XRP was heading in. So if you're invested in XRP, if you're thinking about getting into XRP, or if you're just someone who wants to stay informed about the cryptocurrency market and understand what's really moving these assets on a day-to-day basis, then you absolutely need to hear what we're about to break down for you today. Now, before we get into the nitty-gritty details of what exactly transpired with XRP and why this breakout that everyone was anticipating didn't quite materialize the way we expected, let's take a quick step back and look at where XRP was positioned just a few days ago, because understanding the context here is absolutely essential to grasping why this latest development is so significant. XRP had been building momentum steadily over the past couple of weeks, and if you were watching the charts closely, you could see that the price action was forming a very clear pattern that technical analysts love to see. We're talking about higher lows, consolidation at key resistance levels, and volume starting to pick up in a way that suggested big money was starting to take notice of what Ripple's token was doing. The cryptocurrency had climbed from its recent support levels and was testing a critical resistance zone that had held firm for quite some time, and every time XRP approached this level, traders would hold their breath, wondering if this was finally going to be the moment when we saw that explosive move to the upside. The social media chatter was intensifying. Crypto influencers were posting their bullish predictions, and retail investors were starting to pile in with renewed enthusiasm about XRP's potential. The technical indicators were absolutely screaming that a major move was imminent. And this is something that we need to talk about in detail, because when you have multiple indicators all pointing in the same direction, that's when experienced traders really start to pay attention and adjust their positions accordingly. The Relative Strength Index, which measures the momentum of price movements and helps identify whether an asset is overbought or oversold, was sitting in that sweet spot that suggests there's room for upward movement without being in dangerous overbought territory. The moving average convergence divergence, which is one of the most popular trend following indicators in technical analysis, was showing signs of a bullish crossover that historically has preceded significant price increases for XRP and many other cryptocurrencies. On top of that, the Bollinger Bands were starting to squeeze together, which, as any technical trader will tell you, is often a precursor to a period of high volatility and sharp directional movement. And given the overall market context and the positive sentiment surrounding XRP at the time, most analysts were expecting that movement to be to the upside rather than the downside. Furthermore, the fundamental backdrop for XRP was looking increasingly positive, which was adding fuel to the bullish fire and giving investors additional reasons beyond just technical analysis to be optimistic about where this digital asset was headed in both the short term and the long term. Ripple Labs, the company behind XRP, has been making significant strides in expanding its partnerships with financial institutions around the globe. And these aren't just small regional banks we're talking about, but major international players in the traditional finance space who are exploring how blockchain technology and digital assets like XRP can revolutionize cross-border payments. The use case for XRP in facilitating international money transfers has always been one of its strongest selling points, and as more institutions adopt RippleNet and explore the use of on-demand liquidity solutions that utilize XRP, the fundamental demand for the token theoretically should increase over time. Additionally, the regulatory situation surrounding Ripple and XRP, which has been a dark cloud hanging over the project for several years now, has been showing signs of moving toward resolution. And even though the legal battle with the Securities and Exchange Commission has been long and complicated, recent developments had many in the community feeling optimistic that the worst might be behind them. But then, just as XRP was approaching that critical breakout level that everyone had their eyes on, just as it seemed like the floodgates were about to open and we were going to see that massive surge in price that would validate all the bullish analysis and reward the patient holders who had been accumulating during the consolidation phase, something completely unexpected happened that sent shockwaves through the XRP community and the broader cryptocurrency market. And this is where our story takes a dramatic turn, because what occurred wasn't just a normal rejection at resistance. It wasn't simply a matter of the bulls not having quite enough strength to push through a tough level, but rather it was an external factor, something that came from outside the normal ebb and flow of market dynamics that suddenly changed the entire landscape. The news broke suddenly and spread across social media and cryptocurrency news outlets within minutes. And the impact on XRP's price was almost instantaneous as traders rushed to adjust their positions in response to this new information. The buying pressure that had been building for days suddenly evaporated, and in its place came a wave of selling as those who had been positioned for the breakout decided to cut their losses or take profits from the run-up. The specific catalyst that derailed XRP's breakout attempt was related to broader macroeconomic factors that suddenly reminded the entire cryptocurrency market that digital assets don't exist in a vacuum but are deeply connected to traditional financial markets and the overall economic environment. Reports emerged indicating that regulatory authorities in major financial jurisdictions were considering implementing stricter oversight measures for cryptocurrency exchanges and digital asset trading platforms, which immediately triggered concerns among investors about potential restrictions on trading activity. Additionally, there were renewed concerns about the overall economic outlook as new data suggested that inflation remained stubbornly persistent despite central bank efforts to bring it under control, which raised questions about whether interest rates would need to stay higher for longer than previously anticipated. The combination of these regulatory concerns and macroeconomic headwinds created a perfect storm that hit the cryptocurrency market at precisely the wrong moment for XRP, just as it was attempting to make that crucial break above resistance, and the result was a swift reversal that left many traders stunned. However, it's absolutely crucial that we don't let short-term price action and one failed breakout attempt cloud our judgment about the longer-term potential for XRP, because while what happened was certainly disappointing and represented a setback for the bulls in the immediate term, the fundamental factors that make XRP an interesting investment haven't changed one bit. Ripple continues to sign partnerships with financial institutions around the world. The technology behind RippleNet remains compelling and addresses real problems in the existing financial infrastructure, and the regulatory situation appears to be moving in a more positive direction. What we need to remember is that cryptocurrency markets are incredibly volatile, and price movements in the short term are often driven more by sentiment, technical factors, and broader market conditions than by the fundamental value proposition of individual projects. XRP has survived worse setbacks than this failed breakout, and the project has demonstrated remarkable resilience over the years, despite facing challenges that would have destroyed lesser cryptocurrencies. Thank you so much for watching today's episode here on Today Assets Report, and I hope this breakdown has given you valuable insight into what happened with XRP, why the anticipated breakout didn't materialize, and what we should be watching for in the days and weeks ahead. If you found this analysis helpful and informative, please make sure to hit that like button below because it really helps us out with the algorithm and allows us to reach more people who are interested in staying informed about cryptocurrency markets. Don't forget to subscribe to the channel if you haven't already, and make sure you click that notification bell so you never miss an update when we release new content. Until next time, stay safe out there, trade smart, manage your risk, and we'll see you in the next video with more breaking news and analysis from the world of cryptocurrency.